Hello, everybody, and welcome back to my daily analysis on the financial markets. We're going to be covering topics such as MicroStrategy and hello, everybody, and welcome back to my daily market analysis and insights show. Today, we're going to be covering MicroStrategy and why it dropped 30% recently and how it was dragged by the Bitcoin price falling. We're also going to discuss some fundamentals. We're going to be discussing economic data, FOMC minutes, the PCE data coming out today, S&P 500 going to all-time highs, and also my favorite play currently, which is the Russell 2000, stocks within the Russell 2000s that I'm looking at, as well as a number of other markets such as gold, the dollar, and the European market. So let's get right into it. As you can see here, the main news from yesterday is the Fed rate cuts ahead, but only gradually. So one of the things about this is I think it's going to impact the small caps and the medium caps. There is a section between 2016 and Trump. He came in a low interest rate environment, whereas now potentially see interest rates rise again. And I don't think they're going to be lowered as significantly as it was expected a few months ago. So there's some negativity there, and we saw the Russell 2000 drop a little bit yesterday on this news. That's something that we need to worry about. We have to look at, and we have to look at the growth stocks and small caps, especially considering that these are the stocks I'm looking at the moment as high potential in terms of earning more, maybe 5 to 10% in the next 2 to 3 months, in comparison to 5% that I expect the S&P 500 to do in the next couple of months. Okay, so if we're looking at this, the main thing that I'm worried about is, like I said, small caps. So in 2016, small caps did really well, financials, materials, energy, etc. At the moment, they're performing fairly well, small caps, but we did see that drop, like I mentioned. And what happened yesterday was we saw the S&P 500 perform fairly well in comparison to the Russell. We saw large caps such as NVIDIA, Microsoft, Apple, etc., do really, really well here, with some red and some grey. But the S&P 500 was up yesterday, and we saw the S500 go up to 6K again, or above 6K, to 6,050. Where I expect it to go since the election, it's probably well into December. I'm expecting it to go to around 6,100. 6,000, and then 6,300, with a lot of talk about S&P 500 going to 7,000 again. One of the key events economically is the PCE data. This is something that I'm carefully. We are expecting and forecasting a 0.3% month of increase on the PE, but we'll see how that comes out. I don't think it's going to have a huge impact on the markets at the moment, but it will be something that potentially could ignite fear of inflation. And with inflation fears, we're probably expecting interest rate hikes again. And that's something that I mentioned in a few videos last week, where we could be getting a 1970s style lower interest rates, a consolidation on interest rates, and then later on an increase in 2025. So that's something to watch out for. And that markets, of course, especially growth and so on. I don't think, but let's see. To the S&P again, as I mentioned, very, very positive here on tech services and tech, with Amazon really well. So the large caps doing really well. Money cycling back into these large caps yesterday, and getting out of small caps with of the small caps and out or going into these larger caps. On the S&P 500 is Thanksgiving and New Year's Eve, so the run up to Christmas and New Year's Eve. What impacts of Thanksgiving and Christmas and New Year's Eve on the market? Generally, it's fairly strong. Okay, so we see a strong week during Thanksgiving. And, you know, one of the things I want to watch out for during this period is, do we think that PE ratios are going to be something that we have to worry about? At the moment, I'm not really worried. I would probably be worried if we get this 2021, 2019 peak in PE ratios, so trading PE ratios. At the moment, around 21. If we go to around 24, 25, I'd start worrying about the market, maybe 28. So that's something to watch out for. And Thanksgiving to Christmas, I don't think is going to impact that bump that we usually see, the Santa Claus rally. Data on pin and seasonality is that Wednesday, which is today, and then by Friday we have a movement that's higher for the week. Essentially, 70% of the time it moves higher. So Thursday obviously is a quiet day. It's a day, and then we have Friday a buy up, and then the entire week overall it's a positive week 75% of the time. What we have to worry about moving forward, though, is the following week. We usually see a bit of a sell-off, and it's up only about 33% of the time historically. Okay, so that's something to look for. I am for that very carefully. However, overall, to New Year's Eve, we do see a move up in the markets, and the average is around 1.3%. And the median 1.6, and that's about 75% of the time. So we're probably going to get a Santa Claus rally. Typically, year we get a Santa Claus rally that's very positive, and I expect this year to be this second year rally. 500 is around 3.78%. For the Russell, it's about 5.12%. And again, this is the reason why I'm in the Russell. I'm positioning myself in the Russell. Last week, I mentioned in my Telegram group and the iron ETF. So I'm buying the Russell 2000 ETF IWM. I also bought a number of Russell 2000 stocks. And this is where I'm expecting some significant upside to around 40% for the year. I'll be covering this a bit later. But the Russell 2000 is where I expect to get a little bit more gains. And the likelihood of the rally is around 77%, 70 or around 80%, to say that we're going to get that rally from Thanksgiving. Okay. And with the sectors, season, as you can see, financial, materials, energy are doing fairly well. Small cap right bang in the middle, and I think these can do really well moving forward, which is where I'm positioning myself in. Financial regional banks are doing well, like I mentioned. That's showing that the economy in general in the US is fairly strong. So with the economy being strong, we're probably going to expect especially small and medium caps. So that's where I'm putting myself. Migration, I do think small caps will exceptionally well. Okay. That historically as well. So if we look at the seasonal patterns since 1979, so not only are we getting election impact, so Trump coming in, we know that small and medium caps are going to do well because lower taxes and a number of other factors. I know from past experience and historical data that the small caps also do well seasonally. So around December, mid-December, we see an uptick, and we're currently in November, early December here. So we get an uptick, a little bit of a move down mid-December, and then we get the full trending move well into next year for the next year, and probably getting around I think 5-10%. I'm looking at the 8 to 10% move there on the IWM, and on the stocks I'm picking, probably a 20 to 30% move based on the stocks I've picked and where I think they should be priced at. Okay, so this is something that I'm looking at very carefully here. Now, it doesn't happen all the time, but seasonally it tends to happen since 1979. Okay. Also, and where funds are positioning themselves, you can see that they've started moving away from the Magnificent Seven, so Nvidia, Amazon, Google, are moving into the Russell 3000 index and also going into the large cap core mutual funds portfolios. But predominantly here, seeing a move or an uptick in since 2023, and also now it's around 28% as well. So seeing a move away from the Magnificent Seven, which is quite nice. And then forward, I'm expecting those inflows to go further into the small caps and the medium caps as the momentum moves into the market, as retail and other funds with other strategies will start buying and capitalizing from this swing that I'm seeing in the Russell 2000 and 3000. One thing about always is the market being overbought or being in areas where the financial conditions are looking just too good. Okay. So when you look at here, right now, we are in an area where we're above one. Everything's financial conditions are great. When we see financial conditions around this area, it usually follows after a while. It could be a bit of a delay, 6 months, a year, probably I'm expecting 2025, 2026. We then see either a bearish market, so a drop in 20, 30% in the market, or we see a market where it's very flat. And this is something I discussed in my previous videos before, that Goldman Sachs and a few other trend mentioning that we could get a 10-year period where index funds are not going to do well. So passive isn't going to do well. And we've also seen this that index funds now, there's a bubble, distorts the pricing of stocks. And of course, we're a flat couple of years, 5 years, 10 years, where we're getting 2 to 3% gains on the index funds rather than these 40% gains. So year on year, November of last year to now, I've seen 42% in my index fund investing. So my ISAs, the equivalent of Roth in the US. So that's unheard of, okay, in a year. And we're probably going to get another 15% in the S&P 500 moving forward. And we're probably going to get another 40% in the Russell 2000 in the next year. And of course, once that's done, I think we're going to enter a cycle where passive investing is going to do as well. And we're going to have to look at selecting individual stocks based on their merits. I'm watching this carefully. At the moment, everything looks dandy. Everything looks great. I'm not worried about the markets. I'm not worried about the financial conditions in particular. Okay. And talking about where the markets are going to go now, heading into 2025, we need to make some predictions. My plans are around 6,700, 6,900 for the S&P 500. Other banks like Deutsche Bank, they're in 7,000 at the moment. Okay, so they see that as a likely gain, which is around 17%. I was expecting around 15% from the election, so from a few days ago and a few weeks ago to the high, which is around 6,700 I expected. But we could get 7,000. I wouldn't say no to that, especially because I have index funds that I invest in, and also the market will do well, and I'll be able to trade the swings up. Now, that I have mentioned previously, and I want to mention here again, is buybacks. Okay, so we've seen distortion in the market based on passive investing. So people buying a basket, and overall, the S&P 500 going higher. Nobody really paying attention at these individual stocks. So a boom in passive investing. But we've also seen a boom in the last few years, where we've seen the S&P 500 companies buying back shares. Is about 1.1 trillion currently to about 1.3 trillion next year. So rising in line with earnings, where they're buying back their shares, and this inflates the value wins of these companies, the shares. Okay, so that's been happening. Now I look at the market moving forward. I also look at volatility, and I look at the VIX. Historic VIX is low. It's a volatility in December, especially considering that people are enjoying the season. They're starting around now, around Thanksgiving, moving into Christmas and then New Year's, and they're not looking to trade and they're not looking to sell or buy aggressively. So there's a period of nice mood in the market. No, that usually relates in more buying, price moving up higher. So that's something to watch out for, in the sense that it's going to be positive for the markets. And probably thinking that we're going to see a move of the VIX back to this 13 area here, okay, around May of this year, prior May to July this year, prior to that dip in the market, due to the Japanese carry trade. Okay, so that's in here. I'm welcome that. I do want that, and I think that will drag the S&P 500 to about 6,100, 6,300, depending on where we go here. And if we look at the previous slide, which was where I mentioned that we could see a 3.5% increase in S&P 500 going into the new year, and a 5% in the Russell 2000. When we talk about that, and we look at that, that translates to 6,150 to 6,200 on the S&P 500. So all of this data is now in line with what we're expecting and where we expect the markets to go. And that's something that I'm looking at here. Russell 2000, where do I expect it to go? I expect it to go to around 3,200 in a year's time, potentially to about 2,800 in the next 3 to 6 months, and then another buy up moving on to the latter part of next year. And the reason why I say this is, not only am I seeing this on the technicals, and I've discussed this over and over again, not only are we seeing, we know the impact of the election on the small and medium cap stocks, especially in 2020, 2016, we saw a boom in small to medium caps, but also earnings forecasts. So we're forecasted to see growth in earnings in these small caps in the next 4 to 5 quarters, meaning that we can see growth well into the end of 2025. Again, in line with all these predictions, in line with where price is potentially going to go, but also just extra data to support the thesis that the Russell 2000 will do well in the next 12 months. Okay. Now I want to go into alternative markets. I want to go into the dollar, and then I'll share my chart, and then we can discuss other industries and sectors. So the dollar here, we know that there's a seasonality in the dollar, especially during election season or election years, and we are at these highs on the dollar. I'm expecting a drop on the dollar very, very soon. I mentioned it like a number of times. I'm going to keep on mentioning it here to remind you guys that this is a nice trade for you to. The dollar probably fall around 2 to 3% in the next few weeks. We are around week 44, and we have seen a slight dip here, even though it's at levels. And obviously, go look at these with you guys now. Okay, so straight away, since I was mentioning the dollar, initial dip here. So initial dip. This is what we saw. I just showed you where is the brush? Dip, a buy, then another dip, and then a buy, and then a move down. Okay, that's in going into 2025. Now, by week 52, this movement hits about 103. That's what I'm in. And it is obvious. Trade as the dollar, euro, the pound, the yen. Okay. Now moving in markets, we covered the S&P 500, we covered the Russell a little bit. Hasn't hit new all-time highs here. Again, funds from the Magnificent Seven, they're moving into and the smaller caps. That's the reason why we're not seeing these huge moves here on the Nasdaq. And really I do expect it to go back to all-time highs soon, but flows to go into okay. So the Russell, a bit of a dip yesterday, like I mentioned. We had a retest of this area, which is the 2,500 zone, 2,460. This was a zone that I saw as the first barrier, the first line of resistance. If we can break the levels above this level here, which is an all-time high soon. If we can break that, then make it. So ideally, going along the line, okay, slight dip, rise, dip, and then huge rise going into March and the first quarter of 2025. Okay, that's what I'm expecting there. Like I mentioned, the VIX, I'm expecting a move down to around 12 or 13. So the VIX will show less volatility in the markets, and then we're going to see the S&P 500 move higher here. And if we get that 3% move, so with that 3% move into New Year's, 3%, we're probably going to go to 6,200, okay? And then the Russell go, okay? That will then bring us to the levels that I think to break and then turn into rather resistance for the price up higher, and then move on to this trend that I'm seeing here long term for 40%. Okay. Now I mentioned stocks last week. Chinese stocks are picking up. Okay, and it's worth having a look because they've hit equal here with 618 Fibonacci level, and now I'm expecting it to move up higher. This is the trade that I'm looking for. Okay, I'm looking for this trade up higher, and I'm looking to make 30% on this trade. I will trade in other assets, so like Baidu, Barber, Lee, etc. But this trade alongside Saul and Michael Burry has already positioned himself in this market and sold S&P 500 because of those passive investing inflows inflating S&P 500 artificially. Okay, so this is where I'm positioning myself as well as the S&P, as well as the Russell 2000. Okay, and a few other sectors like crypto, of course. But this here, if we look at we spoke last week quite a lot about the DAX, which is the German index. We've seen a consolidation here. I thought we were going to get a head and shoulder pattern. That's not happening. And then we're probably going to see a consolidation around this area, maybe a break up higher or a dip back down to 18,000. So that's something to watch out for. The French market here, last week, a number of times around this area here, I said I want to see a full bottom here. After this, a double bottom, and then can move higher. Obviously, it'll be a step-by-step move, higher highs, higher lows, but can move to come back up to this zone here and trade our stocks. French financial for me is something of interest. So BNP Paribas and French Energy, Total Energy is nice. And we can see 8% move here. And if we go back to all-time highs, 15%. So not too bad. And if we're in a short period of time, this 15% move, it's not too bad. And if we could pick better stocks within this, that'll perform 20, 30, 50, have the upside of 20, 30, 50%, we can make that percentage within a few weeks, okay, on the swing up. Now, oil. Okay, oil, I spoke about this a lot last week. Oil is bouncing around this area. I want this 9% move to go higher here, and then I'll be entering a few oil stocks, Oxy, Rig, etc. There are a number of stocks that I shared last week. You can go and watch my other episodes. When the time comes, I will be sharing them here on the daily analysis. Okay, gas, it's been doing well. I am in a position on natural gas. I haven't sold off here because I keep finding support around the 20 EMA, and maybe around here it's worth a sell because it's moved around 30%, 37, 30%. Around this area, I'll probably look to sell here. I don't think it has any more upside, but you never know. Okay, gold, metals, gold. Prediction was that we were going to see a move up and then a move down. That's currently what we're seeing. We might even see a bit of a consolidation here. So this is the other option. We get consolidation rather than this movement that I've mentioned. But I don't think gold has much upside until it comes back down at a reasonable level here and gets back up again. Okay, that's something I'm watching out for. I want this dip to around 2,000. Let's say 2,400. Okay, 2,500. Okay, buy up for obvious reasons. It's manipulated and as desirable as gold. So this area here again into resistance, so it could come back down. It could come back down even deeper to around 30, but around this area is pretty good. I think it could consolidate and move up higher with gold. Okay, that I shared last week. Well, I mentioned a number of times that we will probably get a dip here, especially considering this multiple zone here where we're testing this area multiple times as a descending trend line and uptrending trend line, and where it all converges, and then we're probably going to see a dip. And again, we're experiencing the dip that I expected, and potentially even deeper. By the looks of the area, we can go a little bit deeper until it becomes oversold again, maybe around 4%. To watch out for, I did mention it a number of times. And then I talk about cacao. Okay, as a trade, I didn't necessarily take the trade, but I did identify about a week ago now, maybe even a bit longer, as a potential on Tuesday, 12th of November. So over 2 weeks ago, to move higher here, and it's moving very, very nicely here. And you would have made so far 19%, so it's not too bad. It's a trade I didn't really want to take because sometimes I don't like trading commodities. It depends on the commodity, but it's a very nice setup. Multiple retests around here, breakout of a pattern, previous resistance at these levels as well, and then now it's trending. Expecting it to go back to all-time highs, 1,100. Copper is what I've been watching. Again, a double test here, higher from this area. So this is the trade I'm looking for. Or do we go a little bit deeper and then come in and then say a little bit lower here on a better buy, and then again for this 14 to 20%, depending on where we enter. Here, I think more for a few days and weeks, and then we go a bit higher. Okay. And I want to cover a bit of crypto. I mentioned that we're probably going to get a dip after testing 94k. It didn't come. We saw this breakout, and of course, when it hit around 100k, we had the dip. So we had a lot of profit taken there from individuals that have ETFs or these lows here around 54, 50, 52, 54 again. Maybe even here on the breakout like I did. Profit. I also took some profit here off the table. Look here, I usually trail this, but I thought, 40%, that's quite nice. Take some profit and then maybe buy up again some more on the move up once we get a deeper move. Now, where do I want Bitcoin to go in the next few weeks and days? Okay, I did this. We want at least 90, 89. Okay, and then a move back up higher. But we could also get a nicer move, a little bit deeper to 84, consolidate, which will be better for us, and then a move higher to 120. Okay, just depends how the market buys us up. This dip at the end, but they're not buying aggressively. I have resistance here above 96, 97. This is my setup. I am in a trade. I've made a considerable amount of money here within a few weeks. I'm looking at 120 as a key level in the next few weeks. But a deeper dip and then a move up higher, or a shallow is now, and then a move higher. We'll have to see. We'll have to wait for the market to tell us what's going to happen. Ethereum, and one of the things I want to do now, though, is I want to go Ethereum and BTC. So I want to see Ethereum versus Bitcoin. And typically is when there's an alt season or momentum kicking in alts. And right now, I'm really liking the momentum here after this bottom on Ethereum versus BTC. Okay. I'll pop off here around the 10th of November as Bitcoin dominated, and then now we're seeing an uptick, and potentially we can see some significant move here on this pair. Okay. So it'll probably move more aggressively than Bitcoin when we get this final dip on Bitcoin and the market overall. We just have to. Cardano, one of my trades. I think we can go really a lot higher here. We found some support on that 10 EMA here, and then we're bouncing off it. Top here, then I might worry and I might sell a little bit. But let's see how it goes. Even if you consolidate here, I might look at selling. Let's the consolidation, something that I'm watching out for, considering that we could see a double top. Filecoin doing pretty well, 20-30% on this, not too bad. I do have a lot of hope for this when we do get the real alt season coming in and alts get bought aggressively. But let's see. I mean, it's just I'm in profit. I don't see any real weakness here. I just see some consolidation, maybe some profit taking, and then a tick up. So I'm holding through. Matic, very, very similar here, bouncing off about May. Now we can go back up and retest this area again at 62. Atom, bounce off, maybe a double top here. Then we come back down. We'll consolidate and we'll break up higher. But I'm not worried. I'm very comfortable here. I'm in profit. I'm holding. I'm around 30% in profit overall. Cardano's 100 and something percent, but on average, maybe around 40% in total. And the coin, this test when the other coins don't do well for some reason. I think their money flows into. It's around 35%. I'm looking for 50 plus as a still holding multiple times. So strength is in the market with some overbought. We know that run, and it can run very, very aggressively here if it is to buy. Essentially. Now the stock trades, IonQ is one of my best picks of the year so far. months. I've traded multiple times, 84% here, 95. No real weakness in consolidation here. Nothing to really worry for me. Tesla here. And I do think now that we've crossed this area around 350, if then I think we can go to 20 for around 70-80% on this trade. Okay, at the moment I'm around 40%, 45. Okay, just sell here, take the profit, and then enter when there's a dip. Maybe we'll see how the market moves. Moved at all for me. This is consolidate again. I'm a happy hold here, and if it crosses this area around break even, I'll probably sell for break even. Doesn't really matter. I have stocks like QBTS, which have done really well. Here around $3.70. Took some table here. Huge deviation of 10 EMA. Took some profit. We'll probably let this run and see where it finds support. Then come back down, or consolidation, then move up high again, retest this area, and then come back down. That's again the theme right now. I'm looking to sell, which I don't like. I don't like going too much weakness, which I can probably take around 30% here, where we stand, 30, 35. That's watching out today and tomorrow. Okay. Some weakness yesterday, a bit of a sell-off. There's a deviation from the 10 EMA, so potentially we can see consolidation area here. Maybe a dip, a buy up, moving high to the zone that I'm looking for, which is my 1 to 4 risk reward ratio, 32% profit. A few days ago, I bought some pharmaceuticals, so APLS. Talking very minimal profits because it's only been a few days. Overall momentum, 8%. And then FENC pharmaceuticals is the one that's doing really well for me. It's up 23% since my entry. Okay, 4 days. It's not so. I thought this one, Accolade, didn't do well for me when I saw this big market move here, but a bit of a sell-off on, again, FC minutes. DL well with other pharma, but still around this area. I bought around here to hold it. I'm risking one here of my total account with the idea of making maybe 2 to 3 risk reward, but it could go even higher if this really runs. That's where the hope, right? So 1 to 3 for sure. 6 and above. Okay. At this continuation trade here, but it's consolidating. There's no momentum. Currently sitting around break even. Not really fast. 3. It will probably off in the next few days. Thanksgiving. I mentioned the as to why it might move. MicroStrategy. Okay, so I wanted to cover a bit of MicroStrategy here because huge dip the last few days, huge sell-off, support on this 20, found support previously on the 20, which is quite nice, 20 and 10 here. Now, do I think we're going to get a buy up straight away? And I think Bitcoin could drag it a little bit down. So a buy up on Bitcoin a bit, and then a deeper sell-off to about 89 or 84, depending. We get a zone around here, 300, and then we can build that momentum again. But that's the trade I'm looking for. I could easily buy on this area here as well on real momentum if I can see it. But I would like the RSI to come back down a little bit. I would like price to make another low, and then to start creating this higher high, and then higher low, and then we can probably trade it cannot make a prediction here. I try not to make too many predictions like this, but we buy something like this with a retest here of all-time highs and maybe even higher because of Bitcoin's run to 120 plus. Okay, but for something 600 looks quite likely. Okay, so 60% on this trade. Now, if you want to riskier, which is what I'm looking to do, is I'm going to trade the ETF 2x long MicroStrategy. Okay, so I want for maybe to around that area, around this area. High again, I can see 9%, but if we could go a little bit higher, 130% here. So instead of making 60, I'm making 130. Obviously, risking more, but the risk reward there is exactly the same. Okay, I'm a bit more aggressive with this one, but percent risk and see how it goes. Okay. I did like Man Group. It's not showing momentum. Finance very, very trend. Don't really like it. I like Peru in with momentum, so I haven't bought it. I'm just not sentiment in it. And that mentioned last week because this is a German stock, and with the German market probably ticking up off their D, then we'll probably see a 1 to 3 maybe around this area. Let's see how it goes. 1 to 2, 1 to 3. Okay, because again, pharmaceuticals, the smaller cap pharmaceuticals, biotech are doing pretty well. This very, very interesting here because I've been watching it for a very long time. I think can have a 1 to 2, but then all-time highs 1 to 3. Okay, probably the stop loss wouldn't be there. Probably be a bit higher, 1 to 5. If we can get that significant breakout. We had a bit of a fake one on Tuesday, so pop and then sold off straight away. Okay, so that's it for today. We will be covering the same markets again tomorrow with new insights and analysis. So make sure you subscribe to the channel, but also go and join the Telegram group. I discuss ideas with other traders there. And if you have questions, you can always write to me there and I will respond, whether that's for an individual stock or the market overall or just some general advice. I'm always active in that group. So go and join and also go and follow me on Instagram and TikTok because I share bite-sized videos. It's pretty much every day, mostly every day, where you something about the markets and maybe even find some opportunities like the ones I've mentioned today, Russell 2000, and so on. Okay, until